Hey everybody, thank you all for joining us here. It's Brent, founder of SpotGamma, along with Matt. I'll bring him on here. Matt is our CEO and co-founder. We know it's a little bit of a crazy day today. Matt's going to make a brief introduction, but we're here to introduce our HIRO product. So with that, Matt, I'll let you take it away.
Great. Thanks, Brent. And welcome to the HIRO presentation, and thank you for joining us today. Before we start, I wanted to share a few quick comments. First, Brent and I really appreciate you being part of the SpotGamma community. Next, I want to let you know that today's webinar will be taped for all of our subscribers. And lastly, we realize today's a volatile day, and we'll be focused on our presentation and make sure that it's very concise. On a more human note, we do hope that there can be a de-escalation in the current Russian-Ukrainian conflict, and our thoughts go out to all the civilians within those conflict zones. Now, moving on to HIRO. We're excited to launch HIRO directly through SpotGamma. So today we'll be covering all things HIRO, including what HIRO captures and how it complements the current SpotGamma offering, how options trades are hedged and show up on the HIRO indicator, how HIRO has been applied to multiple case studies, how to use all the features included in HIRO, and how to get 1 free week starting on Monday, and also to sign up then at a reduced price. So Brent, can we go to slide 2?
Absolutely.
Please? Great. So now before we dive into the content, as a reminder, SpotGamma is an information and education site only. Nothing we've shared or will share is trading advice, and we suggest you speak to a licensed professional before making any material decisions. Next slide, please. And this is the last one for me before Brent dives in. So to kick off the presentation, we wanted to share one salient concept with all of you. I just think it's really important to internalize the idea that, if you're betting on sports, the amount of people on one side of the bet doesn't influence the outcome, but that's very different for options. As noted here by the chief strategist in the Wall Street Journal article from Interactive Brokers, that in the case of options, it can actually change the outcome. So we believe that the levels and the commentary we put out through SpotGamma twice on a daily basis is meaningful, and we think that HIRO complements everything that's going on there. So with that in mind, let's start the real presentation, and I'll hand it over to Brent. Thanks, Brent.
Thanks, Matt. And again, thank you all for coming today. I know the markets are wild here, so we'll try to keep it short, succinct, and we'll give you actually, I believe we're going to give you a little preview of HIRO to see what the flows are actually for today, which is pretty cool to watch. So as many of you know, I mean, you all here are SpotGamma subscribers. We think that options are a real driving force of the underlying equity ETF index market. And that flow really comes from the source of two hedging flows. We had the idea of existing options positions, which is what the SpotGamma Standard and Pro services measure. And that's the idea that, look, dealers open the day every day. Each day they have a lot of open interest, and they have to hedge as the market shifts around. They have to hedge those existing positions. That is typically, we call it gamma hedging, but obviously there's this Vanna charm type flows as well. And each day we sort of write this note that analyzes that existing position, right? And we say, given a move up or a move down, here's what we think should happen. Now, the second type of flow is the delta hedging flow. And that is the flow that must react to the fact that there are new trades entering the market, right? So we take the existing position, we must hedge that, and then we sprinkle on top of that or add in sometimes very significant intraday flows. Now, at SpotGamma, we're constantly saying, watch out for puts being closed today because of expiration, or look out for this or look out for that. In the context of seeing these intraday flows hit the market, what is that going to do to the existing hedging positions, and trying to forecast exactly how those new flows might interact with the existing flows. So what HIRO's meant to do is fill in some of that intraday blind spot that we all have in terms of what the hedging flows are dynamically intraday. So, again, our key SpotGamma, our core SpotGamma product measures open interest. Open interest is huge. The hedging flows tied to that existing flow is, really the bulk of what we believe matters in the market. And then when you bring in this extra intraday HIRO flow, it adds a little something extra and helps to sort of explain a lot of the movements that we're seeing. So nothing, HIRO is adding on to what we are doing now. The relevance of setting the scene with how gamma is positioned, how implied volatility is going to affect all these large positions, etc. That is the bulk of what we do. And again, this HIRO flow that we're going to talk about is really going to help supplement or add to that existing position. So let's talk about this delta flow for a minute. We're going to use this introduction to HIRO as a little bit of an educational opportunity because we really want to explain what it is that we're tracking here. So for those of you who are not familiar with Delta, it's essentially, it measures the sensitivity of an option to movement in the underlying stock. And if you think about this from a dealer's perspective, anytime someone comes in and buys a call or a put, the dealer or the market maker must hedge that position, right? Now, obviously, there's thresholds of size that they may need to hedge, but essentially the breakdown, as you can see on our screen, of hedging is as follows. If traders are buying calls, dealers are going to be short calls, and they must therefore buy stock, right? So these sort of four categories that you can see on the screen. You know, many of you are familiar with this from tracking our work here over the last several months and years. These are fairly standard sort of if-then statements, right? People are buying calls, dealers got to buy stock because they need to hedge themselves. If like today we saw a bunch of put selling, once traders sell puts, dealers are buying puts back, they got to buy stock or buy back stock, and that can help push the market up, again, as we saw really this morning. So this is the core idea, the foundation really of what you want to think about when we press on and show you some more of these HIRO metrics. One of the other things we wanted to mention here again is the idea that stocks and how stocks are impacted by the change of options flows. And one of the things in particular we're all familiar with now is the idea of gamma squeezes. And the SpotGamma existing data does a great job of saying, look, the trap is set, so to speak, for a gamma squeeze based on the way open interest is positioned, or like today in the S&P, we know that there's large puts down below and those puts are getting maxed out. So the existing positions we know, we can see them and we can make some estimates about how the market will react if the market moves into these areas where big open interest is positioned. And people talked at length about how gamma squeezes were moving stocks up. And that focus on gamma, it's great, right? Because we can see, again, the open interest in the way that the market will react in time. But it misses one key component, right? It is the delta. And gamma is obviously a derivative of delta. And when big options trade, there are deltas that must trade as hedges instantaneously in the market, right? And that can be the trigger point to sort of unlock these gamma squeezes or initiate some of these second order moves like gamma. So that is one of the things that we want to sort of relate here, that there is this extra piece that has maybe not been identified. There's been a veil over it that we think that HIRO is really kind of exposing. So before we get into this last little educational piece, we have SpotGamma currently as it exists with measuring open interest, looking at how hedging flows are positioned at the start of day. And onto that, we add this HIRO component, which is going to measure what are the options, what is the impact of options from a hedging perspective, real time, right now, right? So HIRO is designed to address what is happening right now, and it's designed to reveal when and where the options activity may be moving stock prices. Options activity does not move all stocks all the time. The point and the key is being able to identify where options may be exerting influence on a stock. And with that, we have HIRO to show us, okay, we know from the SpotGamma start of day data, like Equity Hub, etc., where all the positions are, the big positions are, and when this real-time flow comes in, it's helping to see, okay, look, the market is pushing up towards these calls, or they're selling these calls into big open interest strikes, and you can start to put some more of the pieces together, and hopefully that gives you a little bit of extra edge when you trade. So quickly, we thought it would be really cool to show just a quick view, insight into what the dashboard looks like. We're gonna cover all these features in a second. We just want to know what sort of endpoint, where we're all going here. This is the dashboard that is going to be made available to you later. Matt is going to comment on that. But basically, what this is going to show you for all of the major stocks with big options activity, you're going to see the real-time options flow. You've seen a lot of these notes, these charts included in our notes, our daily notes. And the key here is to show you and alert you where and when the big options flow is coming in intraday so you can react accordingly. This is what the dashboard looks like. We're going to cover all these features in a minute. But first, we wanted to pause and give a little background, a little educational information here, a little background on the way that we know that options flow into the market. It's a key component of how all this works. Okay, so as many as you know, there's two ways or two categories of options trades. There's these really big options trades which are typically handled through a bank desk, right? These are, 6-7 figures in premium. These are typically funds that are trading it, right? Banks, pension funds, hedge funds, etc. Those are very large orders. The second type are small orders. These are orders that, typically I'm putting in, right? They may be a couple $100 or a few $1,000s. Likely a lot of you put in those orders electronically through Interactive Brokers or Robinhood or whatever it may be. But there's also large hedge funds that will use algorithms, right? That will put in, maybe they have a very big order, but they break it into small orders and send that through an algo that sweeps all the various exchanges. So there's these two categories of options trades, and we're going to break down how these are traded because HIRO really reveals how hedging flows come in around these two trade types. So for large orders, typically what happens, and for those of you who have worked at a bank or something before, this is going to be a recap of what you already know, but a buy-side trader will call up and say, they'll call a bank, and say, look, I want to buy 10,000 at the money March AMC calls. And the sell-side trader, typically a guy maybe at Goldman Sachs or JP Morgan, will say, okay, great, I'm going to make you a market, and they'll agree on a price. Now the broker, once they've agreed to trade, is obviously short 10,000 AMC calls. However, they're sort of working together here, right? The buy-side trader and the sell-side trader, to make sure that there's not a bunch of market impact, that the sell-side trader who's going to likely commit capital on this trade isn't going to get hurt by this order flow or the hedge, etc. And so the sell-side trader has the opportunity, once he's agreed to the trade and once the buy-side trader said, great, he has the opportunity to figure out how he wants to hedge this thing and how to manage his risk. At a minimum, what they're going to do, more often than not, is they're going to calculate their deltas. So they're going to look at, say, a 50 delta option on 10,000 calls, and say, I got to buy a couple hundred thousand shares of AMC stock to hedge myself. And as a result, they will often print a large block of shares or pre-trade the shares before they print or put up the options order. So they hedge themselves first before they sneak in the option print on the backside. That means their risk is a little settled up. Because if you think about it, if they just push in a big options order and the market reacts, they're then going to have to try to hedge as the market is reacting to this big print, right? And so that can show off the risk. Now, the second key component of this is there's a bunch of different things after the trade is done that sell-side shop could do, right? They could electronically try to trade out of the order themselves. They could choose to keep the whole order on their book and just hedge around that, right? Those positions would show up in our open interest, and we'd be able to sort of estimate how a bank would gamma hedge around those big trades. They could also use what are called layoff accounts. There are accounts who these banks will call and say, hey, look, I just bought a bunch of AMC or sold a bunch of AMC calls. Do you want a piece of that, right? I'll lay off and give you 1,000. So the point here is that once that big trade takes place, there are a bunch of other offshoots of order flow from this that kind of obfuscates or covers up a little bit of exactly what the hedging flow is, how different parties are going to hedge. There's a chain reaction of events. So it's not necessarily as clear how those really big orders will be hedged out. So let's take a quick look on our HIRO chart of what that big order type would look like. Here you can see this is Las Vegas Sands. We see dozens of these different large trades every day. So this is just one rough example. But you can see in Las Vegas Sands, what we show on the chart here is in orange is the call delta in real time, and blue is put delta. So black is the stock price, and what you can see is the stock price rips higher. We immediately have a very large print, and I can tell this is one single print because the line shoots straight up. So that it is immediately, the HIRO system registers about $20 million of call deltas just appeared in a trade. And so what you're seeing here is the hedge takes place, and then the option trade goes up. And so we get this mean reversion order flow off the print, etc. And then the market sort of moves along. It's a hedge once trade and done. Now this big option order trade could have been pieced out again to layoff accounts who may choose to hedge themselves over the day. Maybe the layoff account is already long AMC calls, so this new trade just offsets. I mean, there's a whole myriad of things that can happen, and we'll see the stock move around these different HIRO flows. But this is telling us, look, huge trade just took place, and you can tell it by this big jump in the line. Now, the second type of trade is obviously an electronic trade where you go into your E-Trade or IB or Robinhood and you buy 20 contracts. In this case, we said 10 AMC calls, right? So that's going to go down to an exchange. Now, many are familiar with payment for order flow. even if it's payment for order flow, the order goes to an exchange where a market maker is going to pick it up and then decide what to do with it, right? So we're all familiar with this. Look, I just bought 10 AMC calls. Now, in that situation, that's really pretty small risk for a market maker. They're likely to just not do anything with that order, right? 500 shares probably doesn't move their risk needle. They're probably content to just do nothing. No bother hedging on this one small trade, right? Now, what happens when the Wall Street Bets board all agrees to buy AMC calls? Well, that changes the risk profile substantially because you have all of these different individual players suddenly flooding the market with orders, and market makers who are sitting there, who are required to trade. They're required to post liquidity out there. They're required to interact with the market to make a bid and offer, are suddenly getting hit with tons of AMC calls. So what happens in that case then is, in aggregate, the dealers are short, the market makers are short suddenly hundreds of thousands possibly of calls, right? Instantaneously. We saw this with Tesla and the AMC squeezes and all this. And so as you can see, when you look at the delta exposure, the amount of shares that may need to hedge, that can add up quite quickly. And the difference here between what the market makers have to deal with and the banks is that the market maker finds out that these trades are happening after the fact in a way, right? They suddenly found out that somebody just lifted their offer or hit their bid, and then more guys are coming in and hitting their bid or lifting their offer. It's not the same thing as the broker calling up a fund calling up a bank and saying, hey, let's work together so I can buy 10,000 calls and you can have some time to get your risk ready, right? So the myriad of small orders hitting, right, and some of these can be pretty chunky orders, is really where we see the most impact from HIRO. And if you look at this, this difference in this chart, this happens to be NEO. What you can see is that the stock rips higher, and as the stock rips higher, the option flow, which was positive delta flow, which is people buying calls and selling puts, suddenly turns around the top. And you can see the puts are getting bought, which is negative delta. If you remember back to the original chart, if people are buying puts, dealers have to sell stock. And if also people are selling calls, dealers also have to sell stock. So you can see this flow turn, and the fact that these are smaller, more jagged lines are telling you that this is a succession of hundreds of smaller trades, right? And that aggregate impact is what can drive the stock or move the stock lower. So we wanted to show a few different instances of HIRO in action. These are some examples. I mean, there are literally dozens and dozens of examples every day in the HIRO dashboard. You guys will see this soon enough as subscribers. You're going to get that trial that Matt's going to talk about in a minute, but we wanted to give some examples of how this can be used. So first we wanted to, I mentioned that we mentioned HIRO, we mentioned the flows that we expect to come in often. This morning was a good example. We said that, look, 40-50 is this lower bound. We think that it's stretching the market. We've talked often about puts being sold, and that is the primary driver of the market rallying. On this particular day, which was Friday, Opex the 18th, we said, look, we know there's a lot of puts expiring, and we believe they're going to get bought. Now, it's hard to identify that is really taking place if you don't have this HIRO tool. But what you can see in HIRO is, look, we're expecting puts to get bought. That's our theory. But now we can see that flow is likely happening because we know it's Opex. We go, okay, puts are getting bought because of Opex. That gives me some information and possibly some edge here, right? So on the blue on the left is the spiders. You can see that the blue line is trending higher really from about 11 on. That's telling us that on net, really from the start of the day, you can see it starts at 0. The theme of the day is puts getting sold. And we know they're sold because they're generating positive deltas. Calls are a little more flat on the day. So even though the market trends lower, we can tell puts are being sold, puts are being sold, puts are being sold. And on the right, this is cues from the same time period. There's the initial wave of put buying, put selling. And then into the end of the day, you get another rush of put selling into the close, this time's with the market bottom. And so we can see these flows come in. And it gives us a little bit of extra insight into the fact, like, look, the market is trading lower, but we know these options flows are going to be significant. We know that puts should be sold because it's Opex. And so we're going to give the benefit of the doubt, possibly the market rallying at some point today based on this information. Another chart, we posted this chart and talked about it at length. This is from the 24th, which is a major low in the markets. This is the day after the January options expiration. And we saw really big QQQ puts being bought. QQQ puts being sold. So this blue line gapping higher is telling you these are very large orders, very large put orders that are being sold. This signaled to us that the market hit this low, and all of a sudden these are institutional orders, right? Puts being sold, that signal to us, like big funds, the big guys think that maybe a bottom is in here based on the way that they're acting. And sure enough, that ended up being the interim low that lasted for obviously several weeks. Again, another example here in spiders, you can see that one of the features we have is you could just look at the aggregate flow. So if you want to look at puts and calls combined, there's a little toggle on the chart, but that's what this purple line is. You can see that the deltas turn up as the market hits a low. It looks like people are happy to cash in their puts or buy calls, and that positive delta flow can help to signal the market higher. Now you may note on the y-axis there's a number here. This number is delta dollar notional. So again, part of what we're trying to do here is show you when the flow is sizable enough to matter. And it doesn't always matter, but when you know it's about $1 billion of positive delta suddenly running in the market, that could have an impact. Some examples on stocks and some other ways to really use this flow. Here was NEO from the 18th. The idea being here that if you were looking to play a top in a stock and you can see the options flow switch, right, go from bullish options flow to bearish options flow or negative HIRO signal or whatever, then that is selling that, hey, look, options traders are now betting that this stock is going to go down. So that's giving you an idea of the sentiment of traders, but also telling us, look, now instead of positive delta flow in this name, it's negative delta flow, and the hedging, the appropriate hedging is going to start to possibly pressure that stock lower, right? So you can see that in this case, NEO trades down, but the options flow never lets up. It never backs off. We have persistent call selling and put buying throughout the day, and the stock can't catch a bid. And this is a little bit different from this next chart I'm going to show you. And this is Walmart actually from the 18th, which had a very strong day and was in the context of a weaker day for everything else. And what's kind of interesting is this idea of mean reversion. So you can see as this day starts, the call deltas are very positive along with the stock going up. And a lot of you may say, well, look, they're moving in tandem. What information does that grant me? Well, our statistics actually have found, and we're doing a lot of in-depth stats, we're going to release a lot of this data, that one of the most powerful signals is when that flow turns off. So what do I mean by that? You can see that the call flow here turns sideways. So this is call buying, and then suddenly the call buying stops, right? And what happens with the stock? The stock mean reverts in a major way. This is telling you that one of the major drivers of the stock in this instance was call buying, and then the call buying stops. So when the call buying stops, those positive delta stop coming in the market, and the stock mean reverts. Now, as you can see, that positive delta flow entered back in the market, call buyers started coming back in, and again, the stock rallies. Then we see again, when the HIRO line trades flat, that's telling us that the deltas have tailed off, right? People suddenly, right around 1 o'clock, stop buying calls, and the stock kind of caps off for the day. So this, the flow turning on and off as a major driver, mean reversion, or a major driver of the underlying, can be often signaled here with the HIRO. In a very similar way, we wanted to highlight PayPal here. If you were looking to buy a dip, I was personally looking for a moment in time that the flow may turn around in a name like PayPal. And this is again on the 18th, similar to that NEO chart. The negative delta flow never ever stopped. Put buying, call selling, that was signaling to me, look, the options market does not see a bottom, and they are not anticipating. They're not looking to buy this dip. And so if I'm just trying to even just play the stock, I don't care about expressing a view through options. I can just tell that the options market is still weighing on this thing. And that can possibly keep you from catching a falling knife in this instance. So just to quickly sort of summarize the key ways we think you can use this. These are just some of the ways that we found. Confirming SpotGamma levels. This is actually a big one, and what we will often see is we talk about call walls, right, or our significant levels. Yesterday, you could see that at our major support and resistance lines, the flow would turn. I'm talking about 4270 2 days ago, and actually yesterday, initially that 4270 line provided support, and you can see put selling come in at that level. And so when you are able to corroborate what SpotGamma thinks at the end of the day with the actual flow coming in, you go, oh, look at that. This is a major match in order flows, and it can really provide some useful insights. Along with that, we covered trend following, mean reversion, the contextual ops information. This morning, again, we'll show you what HIRO looked like today. It's just big put selling. That will lift the market. We'll show you the evidence of that momentarily here. And then last is sentiment. If you know people are buying calls in a name, or you can see the gamma squeeze picking up because there's persistent call buying, that's giving you a little of extra information, right? Are people bullish or bearish in this name in general? If you see the HIRO signal positive for several days, for example, that could be cluing you in to some key information.
And one quick comment. Thanks, Brent, for the overview and all the case studies. We've had multiple questions I just want to address quickly from the chat line. This will be recorded, so people that are coming in and out and need to focus on the markets today, we respect that and understand that. That's why we're going through this rather quickly for those that are here, but this will be recorded. All subscribers will get emails within the next couple of days about pricing, access, and all information about the product itself. We've put multiple months, many developers, and tens of thousands of dollars into development, and they need to pay for all the real-time input. So HIRO is an additional feature that will have a cost to it for SpotGamma, but we believe it adds a complement for certain traders. So again, those that are already at our pro level, thank you so much. Thank you to everyone. But pro subscribers already have access to all of these daily levels. Brent just walked through, if you want to make intraday adjustments and you want to see what's happening real time, this information is not found as we can see it elsewhere by any other provider on the internet or any other analytics group. So HIRO is a way to look at the daily flows as Brent just went through and see what's happening for all of these different reasons to confirm our levels. So you've already looked at our put wall and our call wall, have your setup for the day, but then you want to see where sentiment is. You want to see when big trades go off. So this is information that some of the top banks pay massive quant groups for and pay millions of dollars a year for. So we're trying to democratize this, and with our smaller coding team, bring this to you as a new offering. So again, thanks for all the great questions. We'll keep answering them as we go through. We'll do some Q&A at the end. And now Brent's going to continue getting into HIRO and how it works.
Yeah, so I see a lot of questions about how can I set up a trade, right? And we're going to show you today's order flow. And I haven't seen it, obviously, since the presentation started, but I'm pretty confident that we're going to see some flow that'll shine some light on the way the market has moved today. So let's just talk quickly about the dashboard. There's a whole series of how-to videos that you're going to get when you guys have a trial that starts. And again, all SpotGamma subscribers are going to get a free trial regardless of what your SpotGamma level is. So you're going to be able to play with this thing and figure out if it's valuable for you. One in the center column here, we list, at the moment, it's 125 different stocks and indices. That number is going to keep growing over time. What we're showing you here is a scrolling list along with where the stock is trading, the price change on the stock, and then there's this gauge here. This gauge shows you what today's HIRO reading is, basically what the dollar deltas are today versus the last 30 days. So you can contextualize immediately just by quickly scanning this list, what today's flow looks like versus historical flow. So you can very quickly know, today is a big day, for example, in the SPX based on the order flow. Or today is a big day, a bearish day in Target on the fact that the gauge is signaling me that. Anytime you click on one of the center column stocks, this chart pops up. The chart allows you to see the real-time stock price, the real-time HIRO flow, either as a complete aggregate line, that's a purple line, or in this case, there's a little drop down here I toggle to the put call. The second an order trades is when it appears on the HIRO dashboard. There's no lag, right? We pay for this very, very large data feed called the Opex data feed. It goes into our cloud system, our cloud servers, and that is piped directly to your system. We have some excellent engineers, Fortune, 100 caliber engineers. I think their companies may be bigger, but these are, we really invest to make sure this is fast and user-friendly. Lastly, one last thing to note here, we have this trending sign, right? So I mentioned it's important to know in real time when significant flow is coming in. So this trending, we have a little algo that reads if the flow is significant for that name. 10 or $50 million flowing into MRO or AMC is different from $50 million flowing into the S&P, right? The impact is different. So we flag in real time this little list changes here that says, hey, look, something right now is going on in PayPal. You maybe want to go check it out. So you click on PayPal and the chart accordingly would pop up. Lastly, we do a few different things to aggregate the order flow. So we would group all of the symbols. For example, these are all basic material stocks or tech stocks. Here's how the tech sector is moving in aggregate from an options flow perspective. So with that, I'm going to turn this over quickly to Matt. Matt is going to talk about how you can get HIRO and some of the other business side of things, and then we'll take some Q&A and show the live screen.
Great. Thanks, Brent. Just for full transparency, members of our team are actually out on holiday or with family right now, so I'm personally fielding some of these questions on SpotGamma support and appreciate all of those. That's why I keep looking down. But again, we're a small team. We really focus on content for you guys to get you the best access to what we see happening. So, Brent, thanks for doing that full overview. Again, we'll make this video fully accessible for everyone. Here, looking at the launch schedule. So for next steps, all SpotGamma subscribers will receive a link on Monday providing login detail to access HIRO for free for 1 week. So again, this is an option people have. I want to make one quick reference to questions we received many times in our inbox. If you're a happy SpotGamma subscriber and you don't want anything to change, you don't have to do anything. We're not raising your current price. We're not changing your current offering. We appreciate you. We are responding to requests to have access to real-time information. And we built out this unique dashboard platform and different indicator profile to be able to help you with that if you want to continue to add on new services. So again, happy subscriber, don't want to change anything. HIRO is not your thing. That's great. We're here to support you. You want to move up and have HIRO as part of the overall offering. Again, we've invested a lot of time and efforts into that and want to continue to be a resource for you to make sure you're making optimal decisions as you manage your assets. So again, on Monday, we're going to provide the login for details. You'll have HIRO free for the entire week. We really hope this experience helps you see the power in HIRO. We'll provide another exclusive webinar 1 week from now after everyone's had a few days to see it and feel it and understand how it works and what it captures, where we can do a longer Q&A format. Today, we're just going to cover some of the biggest Q&A questions. I tried to capture those, Brent, here at the end. And then toward the end of next week, starting on Thursday. So while the free week is going from Monday to Friday of trading, Thursday to Sunday will be time to sign up at a discounted price for our current subscribers. So that'll all go out in emails very clearly over the next few days. We want to make sure that's clear for you and really thank you for all your engagement and loyalty. So to wrap up on the next slide, before Brent does show you what HIRO is doing today in real time, for those people that are asking how does HIRO really work. Next slide, please, Brent.
Yep.
We just want to make one more back one.
Sorry about that.
What's going on over there? So if we could, the profile page at the end. There we go. So let's go.
I didn't know that's what you're looking for. My bad.
Okay. We would love if you follow us on Twitter and YouTube, where those handles are right here, because we do try to put out some additional free content information as we share things via those mediums. Again, we launched SpotGamma Academy in December. SpotGamma Academy is a 3-part course. The hedge within SpotGamma Academy is the name for a 3-part course that really goes through deep detail with more than 6 hours of training materials about what options are, how they're priced, and how to trade them. So if that's something you're looking for, that's there as well. And we're going to continue to work on improving and adding to more and more training around how to use SpotGamma. It really is important to us that we are not giving trading advice. We are giving educational information and analytics around the options market and its influence on the stock market. So we try to walk that line carefully as supporting you and your efforts. But we do know that we can continue to improve in those areas and really, again, appreciate all the feedback that comes in through customer service during webinars like this. So next, and to wrap up, let's have Brent please show you what's happening now in HIRO. We think it's exciting. We think it's real-time salient during a day with real, geopolitical unrest, which obviously, again, saddens us, but hope that results can be taken in a diplomatic fashion. So Brent's going to go through now some HIRO stuff. And then, Brent, I captured about 5 questions I think that weren't addressed necessarily in the video, and then we can capture more via emails that come in.
Yeah. So great. So this is the HIRO dashboard in real time. This is on our development server here. So what I'm looking at the moment is spiders. Now the black line is the stock price. So this is the live real-time price of spiders. The blue line are puts and the orange line are calls. So the moment that the market opened, the put line trended higher. That is telling us that traders are selling puts, right? Because when puts, when you buy a put, have a negative delta, and when you sell them, they have a positive delta. So the aggregate trade to start off the day was put selling. And you can see that has persisted up until quite recently. It actually turned right as the market hit 4,200. So at 4,200, put buyers have now come back in, and call flow has not been much of a force so far from the delta information. Now, if you think about this, this would make sense, right? Because with implied volatility very high, calls are expensive. If the market starts rallying and the implied volatility comes down, you're not going to get as much bang for your buck being long a call as you are going to be selling your puts or just plain old buying stock. So when we talk about puts being a driver in this market, put buying driving the market lower, put selling raising the market up, well, that flow, you can see it happen here in real time. So when the market opens and it's chipping around a little bit, but you can see this put flow come in sold heavy, that is a good indication that the market is going to rally, again, based on this order flow. And then you can watch like the VIX, for example, or implied volatility coming down, and that's giving you a really strong confirmation that we're in. And before we mentioned, the signal changing at significant spot gamma levels, right? This morning we were talking, 4,200 is obviously an area where there's a lot of open interest. You could see, again, we hit 4,200 and the flow changes, and here comes the market. The market comes back down. And the same thing if you were to look at Qs. I hadn't looked at Qs so far today, but it was big put selling to start the day. And now you can see the fact that the HIRO indicator is sideways. This is telling you that people are no longer really selling puts. In fact, just in the last few minutes, they started buying puts. Call flow, not particularly impressive. So the start of the day was sell a bunch of puts. It's probably a lot of people trying to monetize or take some off the table as the market sort of opened at lows, right? And we get this big rally. So this is the insight that you're getting in real time. You're seeing this change throughout the day. One of the things that I didn't mention
Brent, real quick, just interject real quick, Brent, on this put selling and buying. He just slowly for 30 seconds explain again how we know or how we're assuming there's buying or selling going on.
Great question.
Coming through. Yeah.
Great question. So on our raw data feed, the data vendor is actually marking the order bought or sold. So we're not simply looking at if the trade was taking place at the bid or offer. There's actually a marker on there that tells us whether the order is bought or sold. So that is the initiating party. Most often than not, the person initiating is just a trader, and the market maker most often than not is going to be on the other side. So it's certainly possible that I could post a buy out there, and then Matt could come and sell with me, in which case obviously that's not going to be hedged flow. But we know if there is major flow coming in, market makers are going to be the bulk of who's on the other side of that, particularly in these instances where it's lots of small trades going on instead of sort of a big chunky line. Again, I just flipped to Microsoft. I mean, you can see in this case there was huge call buying in Microsoft, different from some of the index flow we've seen. Again, everything in here is interactive. If there's certain stocks that you want to look at right now, we have 121 loaded in the database. You can see as I scroll down through here, you're getting a sample seeing all of the different orders that we're looking at. I know a lot of people like Tesla. Tesla's been quite weak to start the day. Looks like people started to cover puts on the open, and there's actually a little bit more call buying now sneaking in around noon, and the stock is obviously up in accordance. The stock is obviously up significantly. And again, I want to stress something here. We don't think that options drive every single stock all the time. The point is identifying when and where the options are a major driver. And that is why we have this trending. That is why we have this signal here. So if the signal is all the way to the right or left of the gauge, then you know that relative to the last 30 days, there's significant order flow taking place, options-based order flow, or significant possible hedging flow in the name. The gauges is set up to help you to identify when these options could really be having impact. I too am going to scroll through the list here if you guys have some questions. I know you asked some questions.
Brent, I identified, I think, 5 main ones here that we could start with, and I'm continuing to capture them. There's a lot of really good ones. I'm being candid, we're not going to be able to get to all of them. But right now, somebody asked, how does HIRO differ from other products online that show overall options flow?
Yeah, so that's a great question. So if you think about what a lot of these systems offer you, they show you what the big options trades are for the day. You then have to do the mental gymnastics of memorizing when all of those individual orders came in, what the impact could be. So you got to do the delta calculation. You got to remember when all these trades last hit. You got to try to grep through and figure out when and if there was any impact to this stuff. And then a lot of these biggest trades are trades that are hedged ahead of time. As we mentioned before, you're seeing, and I could probably likely find one here where there's just one single big print. Like, look at this GM print here. This is not a bunch of call sweepers. This is some kind of big fund. Let's see what they likely did. It looks like they bought calls in GM. So you're probably going to see this in some other type of system, right? Big call print in GM, but that information is not as useful because you can't aggregate all these smaller orders to figure out that. I think it's the cumulative effect of a lot of small orders that really has a lot of noticeable impact on the stock. So that is really what the difference is. We're not telling you how much premium is spent or how much open interest there is, because on a real-time basis, that arguably doesn't really matter, right? You are trying to identify when this options flow is going to have an impact, and I'm talking on an intraday basis. You want to know when the options flow is going to have an impact. You want to look at the delta, right? If it's big deltas, if it's a lot of deltas, then that is going to drive the stock up or down. That's what we believe. And if you just see, oh, look, a lot of premium traded, well, that premium may or may not be a high delta order. It could be, someone maybe bought a leap, right? It's 2 years out, so they're paying a lot of premium, but the delta impact isn't very big, or it's way out of the money. It's a bunch of smaller way out of the money positions that, again, the dealers maybe don't want to hedge right now. So the delta is really what the intraday hedge impact, and that's what we really want to focus on.
Okay, thanks. Does HIRO capture prints across all exchanges, including trades
Yes.
that may even take place in a dark pool?
Okay, so no options orders can take place in a dark pool. Stock can trade in a dark pool, but there's no such thing as a dark pool for options. So all options prints must happen on an exchange. Even if they are sent to a market maker first, the market maker has to print that order on an exchange. So this system is capturing all options trades on all exchanges, obviously US based. And one other, and I want to focus. We are only looking at index, ETF, stock options. We are not currently looking at futures options. That's a smaller market. There's a lot more to digest here in the equity index market.
Great. What is the time lag for HIRO, if any? And do we have to hit refresh, or does it automatically stay current?
Right. Shouldn't be any time lag. The time lag is milliseconds, right? This is all cloud-based, so everything is hosted in the cloud. It goes out to the cloud and then loads up on your system. So any other perceivable lag might be in your internet connection to Amazon Web Services. It is in real time.
Simply this is real time, as Brent's saying. This is not a 15-minute delay like you might see on a Yahoo Finance or something else. This is a real-time indicator that we're
Correct.
bringing in millions of data points per day to aggregate for you. On trending, Brent, can you just comment on, for instance, Microsoft? Like, why would that show up today? And just not technically, but just philosophically, what shows up on trending again, and how do we think about that?
So what this is we have a little, I won't call it an algo because I don't want to make it sound that sophisticated, but it's basically a little algo that watches all of the stocks in our system and says, look, relative to the basically standard deviation of order flow that we usually see in, say, Microsoft or Palantir, what is happening now in the last 5 or 10 minutes is significant order flow. You want to pay attention to the stock right now. And so as you can see in Microsoft, this is big buying. This is big call buying. If you look at this on a more aggregate basis, you can see that this is just shooting up. I'm hoping that on this conversation, we will see this call flow shut off, and then we'll see if the stock mean reverts. Right now, the total options order flows just keeps trending higher, and I think that will keep a bid in the stock. If we see something shift, people sell calls or buy puts, then maybe the stock will trade off. But basically, again, what the trending algo is doing, the purpose of it is updating in real time. It's trying to alert us to where big options order flow is taking place right now. I think I mentioned this already. If I didn't, equity hub levels for the names are being pulled in and displayed in your chart, so you can know here's what the open interest, the gamma models that SpotGamma shows. This is where we see our big levels, and you can see how the stock order flow reacts or changes around our equity hub levels, which I think is a cool feature.
I think one very simple question to clarify also for users is that just what is the value in the gray number? So two quick things, one comment, then one question. And I think then maybe one or two more and we wrap up just to respect everyone's time on this volatile day. But as a quick comment, this is the view you will see. A few people have asked, is this the developer view that's special? No, this will be your interface. You can set your own watch list. You can have that down to 5 names. As you can see, we're going to launch with 120 plus names to begin with. We're going to continue to add more names, hopefully on a monthly basis. We will be putting in one price for SpotGamma subscribers that are lower than the market price coming out on March 7th. Then it will be there, and the price will only go up from there. But when we continue to add in more names and more features into HIRO as part of a new subscription level, we will not be continually moving you up. We have never moved a SpotGamma subscriber up in price from their original level since inception. So second thing is the question is, Brent, numerically, just again, somebody's asking, what does 6 million mean for AMC and trending, or what do the numbers in gray mean to the right of our 30-day indicator there? And before you answer, we are going to have a how-to video coming out over the next week additional how-to documents, little eye boxes that explain what different areas mean. And then we're going to be doing more analytics around each of these areas and data fields on our site going forward. But Brent, how to think about just today? What do those numbers mean, or how do they internalize them prior to more of this educational content we're currently developing?
Right. So this is dollar notional of estimated hedge impact, right? This is the maximum possible that we're estimating. So $11 million in Palantir would be the net delta, essentially delta notional impact. So if you were just divide this by the stock price, you get an estimated number of shares for each stock. And again, the actual figure is interesting itself, right? But what you really want to know is that a lot in context of what's been happening typically in a name? So this is giving you, again, a dollar figure is what the is what that is showing you.
Okay, great. So I think we're probably at the end of the general question session. We've gone through showing live HIRO. We wanted to target 30 to 45 minutes, so we're kind of at the larger end of that. Anything else, Brent, you want to kind of say before we sign off? Again, we're super excited for this product. We, again, know not every product's for everyone. Some people use our OCC indicator, some use our gamma chart, some use our Vanna chart, some use our dark pool indicator. But we wanted to bring a real-time hedging impact product to you, again, at a retail pricing level that Brent and I have seen the inceptions of for years on trading desks at institutions, then had those developed in robust products, but those cost in the $10,000 plus a month category. So this is our effort to bring this forward quickly. We'll continue to improve education materials and really appreciate our community. Anything else, Brent?
No, I agree with that sentiment completely, and we look forward to hearing what you all think of the product, and we're very excited to have you try it out. So thanks very much, and good luck trading the rest of today.
Okay. Thanks, Brent. Thanks, everyone.